Steve Roy really needs no introduction. I think he's familiar to all of you as President and CEO of Tricorp Federal Credit Union in South Portland since 1995, but started with Tricorp in 1982, I think it is, Steve, or thereabouts.
Correct. Yeah.
And so he has a ton of experience and actually worked in a credit union, which I had forgotten for a few years before that. Main Family Federal Credit Union. I don't know if that credit union is still around.
Yes, it is. Yeah.
Really? So still there. They survived all these years without you. Amazing.
In spite of me.
And we also have on the line with us Sean Carter, who I think many of you have probably heard about, if not met or heard directly before. We've used him in a couple of events for our association. I know Tricorp has used him a number of times at different events. Sean is president and CEO of NEACH and the NEACH Payments Group. He's responsible for strategic direction of NEACH, all of its products and services, governance, relationship management with members, the Federal Reserve relationship, other payment stakeholders, and on the list goes on and on and on. And you know, when I initially heard of NEACH many years ago and thought of NEACH, it was ACH that came to mind because that's kind of part of the name. But really, NEACH, gets into far more than ACH and has a finger on the pulse of everything to do with payments in the northeastern part of the country. And so we're really fortunate to have Sean and Steve with us today to talk about payments and what's changed, what things might look like in the future and whatnot, both for moving money around and for what your members may or may not be experiencing going forward. So I just thought we'd turn it to Steve and Sean, and I don't know which one of you wants to start things rolling, but if you just want to run with it. And I would encourage everyone we're a small enough group, feel free to ask questions along the way or post questions or comments in the chat box if you're more comfortable doing that. And so with that, thank you, gentlemen, for joining us.
Sure, and I'll start off, Joe. Just want to say that, Sean has been CEO since 2017, but he joined NEACH in 1998. And I think that was the same year I joined the board. So Sean and I have been working together for all these years and seen a lot of changes in payments. And probably I would say, though, a lot more has changed in the last few years, or as good a change than maybe it has in many years. But Sean brings a lot of experience and knowledge. And so we've got some questions and some thoughts we want to share, but certainly if anything comes to mind, please bring it up. I don't want to just, pigeonhole this discussion. If there's things that people have want to talk about, please let us know. But first thing we thought we'd talk about is what's happened to ACH volume since the pandemic. How has that changed? What's been the migration to the ACH payments, and what are the types of payments that are fueling growth? And there's actually been quite a bit. So, Sean, talk about what's happened with growth in ACH volume.
Yeah, thank you, Steve, and Joe. Thanks for having me, and always a pleasure to talk with this group. The growth has been phenomenal. Last year, NEACH had 2 billion more items go through the network, and so the thought was, that's the initial part of the pandemic. That's the initial EIP payments. And what we actually saw in this first quarter was tremendous, almost 13% growth. NEACH has had its highest first quarter ever, including surpassing a milestone in same-day payments. So the areas that are generally been fueled are P2P payments. So we think some of that is pandemic related, right? People can't get together for birthdays. They're using Venmo. They're using other P2P applications that are at least settling over the ACH network, right? So you get credit for that settlement item. We're seeing traditional growth in PPD, which you would say, wow, everybody's out of work. That should have been declining. Interesting stat on that is the way that unemployment is paid weekly has actually grown volume, because in some cases, people that were getting paid twice a month or once a month or every other week, they're now getting a PPD deposit every week. So the volume related to unemployment has been pretty high. And then the last big area to round it out has been business to business, but really in the healthcare space. Some of you may remember back when the Affordable Care Act went into law, part of that was a requirement to make electronic payments in the healthcare industry. And so with all of the hospitals getting paid, all of the insurance going back and forth, that's driven a lot of the B2B growth. And what we really don't have a handle on is how many net new originators are there in the network. We know, like anecdotally, NEACH has stopped writing checks, right? We couldn't have someone in the office to sign them, so we've moved everything through ACH or wire, right? And so a lot of businesses have had to have done that because you just couldn't get in to write those checks, right? Which is a weakness in the check process. So those numbers get buried in either that CCD, or a lot of companies don't format it right, so it gets buried in that PPD or web volume. But the growth has been really interesting, and the fact that same day ACH grew as much as it did really is, I think, is important, Steve, and we'll touch upon this when you start thinking about what's next for payments. You know, I've been around a while, and I've always heard, when I first started, my first job was to hold the projector and turn the slides for a guy from the Fed who was saying checks are gone. That was my first job 22 years ago, and we still see billions of items today. And now you're starting to hear the same, well, ACH is going to go away. And I kind of look at that different. As you come through the pandemic, the question we're all going to ask is, what type of payment couldn't the ACH handle? Now that you can get money out faster using the same day, you can do emergency payments if necessary. You can do B2B payments at the drop of a hat and get set up pretty quickly to do that. So it bodes well moving forward to think about, in this bigger picture of payments, when people are talking real time and some of the other stuff that's happening. In order to get change in payments, there has to be something that the existing systems can't accomplish, right? So checks, they couldn't withstand the population growth out in the West Coast in the early 70s. That's why the ACH was created. It just couldn't handle the volume. So I've been thinking about this for almost a year. Is what can't ACH handle that people are looking for, right? To assume that all volume is going to move to another network in any short period of time. So I just find it fascinating to see that you had a mandate like Obamacare, Affordable Care Act, that helped fuel growth. You had the pandemic, which the network responded to, helped fuel growth. And then you also have just the traditional migration of P2P, people getting more comfortable with technology. So it's almost every bucket is fueling growth. It's not one singular area. And anybody that looks at data, right, when there's multiple things fueling growth, that's usually a good sign. If this was the stock market, there'd be an arrow going up for ACH volume, because it's multiple things contributing to the overall growth.
Okay, Sean, and for all the participants, I mean, obviously NEACH is New England Automated Clearinghouse, but we're going to talk about more than just ACH. But did have one more question certainly about ACH. There are, as you were talking, there's a lot of challenges, alternative payments to ACH. But, there's been a lot of adaptations to the ACH network. You talk about same day. So are there more settlement windows coming? Are there more adaptations that we can expect in terms of ACH?
Yeah, so for ACH same day, just this past March, we opened the third window, the third same day window, which is that 5:30, 5:45 window. And then a year from March, we're going to have $1 million transaction limit. The goal is to have more windows. You will have at some point, weekend and holiday ACH processing available. I know that the Fed and NEACH have that as that kind of their blueprint to move forward, is to look at the net settlement service and how can we do those things to get the ACH flowing on the weekends and holidays. And for the Fed to do that while they're also looking at building a real-time system just shows they understand that ACH serves a purpose and is not really going to be going anywhere. How fast that happens is interesting, because NEACH, when the ballot came out to raise the limit to $1 million, there was supposed to be a second part of that rule that got us to unlimited. by default, right? So it was like 1 year, it went to another level, and then the third year was going to be unlimited. And and the industry said, wait a minute, let's approve 1 million for now, and then we'll come back in 2 years and take a look at that. So I know there's some hesitation to keep expanding the dollar amounts, but as far as windows, the people on the West Coast are clamoring for more windows still, right? Even though this third window in theory was supposed to help them out, there's still some challenges for West Coast as ACH is all East time. But the impediments have been really the Fed itself, right? That net settlement service that has to close at a certain time, which they pushed a little bit back for same day, where wires and ACH have to settle between the clearinghouse and the Fed. So there's some work to be done. And I know in the faster payments improvement paper the Fed put out, it wasn't just talking about real time. They talked about doing things with the net settlement service and the accounting functions at the Fed to help expand payments. And that means more windows, more time slots.
Okay. Okay, Sean, let's go on a little bit of talk about digital currencies. I know there's been a lot of news about that lately. We all hear, about Bitcoin and a lot of different coins. One that has come out recently is something called Coinbase. Yeah. It's just gone public, and there's some considerations for that, I think, for credit unions in terms of your members getting involved in that. So, Sean, you talk about that for us?
Yeah, so I think there's a couple of things to note here. And I'm going to first and foremost stick to your consumer members right now that may be purchasing and trading on those cryptocurrencies. You may be getting questions from your members about tax obligations and things like that. Coinbase just put out a great IRS kind of a PDF that it's a public document off of Coinbase if you wanted to educate your members a little bit on the tax implications of trading. Because remember, this is investments right now. So Bitcoin is really about an investment. It's right now not a major payment vehicle. It may be, but right now it's more on the investment side. And there's two things I think credit unions need to be aware of for your members. Number one is if they're disputing a purchase of Bitcoin, that's not covered by Reg E. Reg E does not govern investments, so securities or anything like that. So there is no protection on those type of transactions. So if you get somebody debiting from Coinbase to their debit card or through ACH, and it's beyond the normal timeframes within those payment systems, so for ACH 60 days, you can help them within that 60-day period because the rules allow that. When they go beyond that, you might not have an operational return window on either the card side or ACH. So I wouldn't automatically go and recredit the member under Reg E because you could make an argument that Reg E doesn't govern or protect that. And that's right in your disclosures already. It tells them what Reg E covers and what it doesn't, more importantly. I'm not saying you can't help them. I'm just saying you may want to think about that because some of these transactions, we get calls all the time. People are disputing $40,000, $50,000 purchases for digital currency just to recredit somebody that with no real vehicle to get that back. I know you guys love your members, but that's an awful lot of love on one transaction. So just kind of think about that. The other part of Coinbase that I found really interesting, point of honesty, I was looking to purchase that stock. I didn't realize they had a whole merchant application to sell POS terminals that could take all kinds of digital currencies and convert it to US dollars for the merchant. So if any of you have a strategy of going after small business, this may be something people are asking about in the small business space because there's obviously more to gain than the interchange that they have to pay when they're taking cards again, I don't know how long we are away from merchants readily adopting what Coinbase is putting out for a system because I'm sure there's a cost like there is to upgrade any POS system, but it is something to keep an eye on. And I like to do things in a very simple way, right? You need to know when to go, right? When do you make these decisions? It all starts with keeping an eye on the right thing and listen to what your members are saying, both existing and the ones you're trying to get. if you're getting a sense that the small businesses are looking to get into the digital space, I would refer them to Coinbase to get their merchant terminals through there, because I know there's other players that are going to get into the space, but Coinbase has set itself pretty clear apart from everybody else in the digital currency space as being a broker dealer, and I really find it interesting that they have a merchant application. And again, where your members are at today versus where they're going to be in a couple of years is always interesting to try and figure out. But that merchant piece to me, you see it now. I mean, Tesla, some of these big time rich folks that own big companies, they're accepting these digital payments. In the Bitcoin, I know like Overstock.com has been accepting Bitcoin for a couple of years now because that CEO hates banks, right? And he thinks keeping FIs out of the transactions are a good thing, even though people are buying Bitcoin from a bank account. But let's not get derailed, right? We don't want to break his heart all in one swoop. But so you get some kind of like pockets of types of vendors that accept Bitcoin. And then there's some of these fake Dogecoin and some of these other things that are trading that you use on video games. I'm not a gamer, so maybe you have kids or relatives that are. You can purchase stuff on those. So that's creating a generation that's now going to be used to not using a debit card or cash or a check or something. They're going to be used to hitting a button and that they've had the stored value of Dogecoin and they're able to buy a sword or whatever it is when they're playing some of these cool games. So I think the interesting part right now for me with the Bitcoin is how it's impacting our member FIs and their members and customers from a purchase and selling in an IRS situation. But I think this is going to morph into a small business merchant type. It may have to be in a couple of years part of your package that you're offering any small business, like being a merchant card provider or creating your own space as a Coinbase. In that case, you'd be an ISO for Coinbase, I guess, like you play in the card space. So really interesting, but the momentum on the investment side always keeps to get squeezed because now the Fed's talking about a Federal Reserve digital currency backed by the government. And so if there's one of those, a merchant's going to go back to old reliable and trust that type of payment over the less stable Bitcoin. Because right now you can buy a car and give somebody Bitcoin, and if they don't turn it into dollars right then and there, that value could go up, right? And they end up getting $1 million for a Toyota, right? Or it can go the other way, right? And you get a Toyota having traded a Bitcoin for which has no value right now if it went down. So just a very interesting space. But I would, as a credit union, watch out for those members that are trading. Maybe use some of the Coinbase resources or links on your website to help them. But just watch that Reg E piece because these are large transactions, right? Some people are selling Bitcoin now that got into it when it was like nothing, right? So they're getting hundreds of thousands of dollars in ACH deposits into the account. It's making your OFAC flags and your BSA whistles go off. You really need to keep an eye on those transactions. Credit coming in, you're only allowed to hold it a day under the ACH rules to decipher whether it's fraudulent or not. Beyond that, you have to give the availability. But on the debit side, that protection gets a little sticky with Reg E. It's just like a stock, right? You can't come into a financial institution on day 90 and say, oh, my stock tanked. I didn't authorize it. And people try it. You're not supposed to. So you just gotta be careful with that. I know people want to be helpful, and when somebody says, "Oh, I lost 30,000," their immediate reaction is to help, but sometimes you can't, and it's not the best idea to help.
Couple sidebar comments on that point, Sean and
Sure.
Steve. Sean, you remind me that it was a couple years ago we had a regional credit union leaders conference it was in Nashville or wherever, but for people from the Northeast, and I want to say we had someone from the Federal Reserve, Boston Fed there, who was explaining about the Boston Fed's involvement in some research or lab cooking of plans for a Fed version of some kind of cryptocurrency and whatnot. And then I never really heard much of anything about it
Yeah,
beyond.
that's actually Jim Cuna's group.
Yes,
Over
yes,
at
that.
he's over at the Boston Fed, and if you look at a couple months ago, they put out a press release. They hired some engineers from
Oh, really?
Coinbase and some of these other. Oh yeah, they are moving forward with something, right? So the big question keeps being, what is that, right? It's, part of the lore of the digital currency is you have a segment of people that don't want to be part of the banking system. That's why they're using it, right? That's why they want it. So will there be that same appetite for digital if it's backed by a federal government, right? So a lot of this is some of that, go back to the gold standard, right? Those people that wish we never got off the gold standard. Um, it really creates a dilemma. Now, if the Fed creates one, right, then there's going to be tools just like there are for any other system to be able to do those transactions. You're talking again, merchant terminals, back end connections. Um, Somebody's got to do, is it going to be as volatile, right? Is there intraday gains on a Federal Reserve currency like there is potentially on Bitcoin? I don't have those answers, and I don't know. I know that there's going to be another paper that comes out about what the Fed is doing. So everyone on this call, you guys are first district FIs. Jim Cuna is a rep on the NEACH board, on the NEACH board. Sorry. Um, if you want any information about that, I would go to the Boston Fed website. But you can also go out and connect with Jim on LinkedIn. He posts almost everything that the Fed is doing. So on LinkedIn, he's James Cuna, Cuhna. I believe is how that's spelled. Really interesting stuff going on. And every once in a while, you hear in the comments from the Fed chairperson, they talk about that. And I know it's a talk globally about who's going to back these currencies, but we got to watch what that impact is to the people that actually want to be in that space. There's some people that still like to write their checks. There's some people that are going to want to use Bitcoin to buy everything, right? We have such a wide range of where people are, so it's hard to make a big splash in every area because a percentage of the people aren't going to touch it. So like in business school, they would never tell you to move forward with a product that you didn't understand what the market was going to be. And I think this is where the Fed has to think about, is it, again, because it sits on a blockchain, right? You can always turn the value of these coins into the value of moving the information in a more secure manner than other ways of doing that. So don't forget about the technology behind Bitcoin, which is really what's interesting in a banking sense is the blockchain, right? Where there's a record of every single transaction, a ledger that lives on forever, where everybody can see what's happening. Really cool way to prevent fraud. You think about, some of you may deal with some of these home closings where the bad guys get people to route money through wire transfer to the wrong bank somewhere else because they did a sophisticated account hacking. That stuff kind of goes away with the blockchain. A lot of it goes away with the blockchain.
The other thing you remind me of is that, of course, my role is predominantly one of advocacy at a state and sometimes federal level too, right? So I get to interface on a weekly basis for the past year plus with, the advocacy folks and all the other state credit union leagues and whatnot, and at a federal level. And it wasn't so long ago that you would hear going on in state legislatures around the country. It'd be like, a bad penny coming back every 7 years that some legislators would bring up about, oh, we should form a clone of the Bank of North Dakota because it'll be a gold mine for state coffers and so on and so forth and everything. And every time that comes up, it doesn't fall on deaf ears. They get excited about it and whatnot, but it doesn't traditionally go anywhere. And it comes up here in Vermont every couple of years too. But now, over the past few months, most state legislatures in session, and what I'm hearing from a surprising number of state houses is legislation or people talking about drafting legislation having to do with cryptocurrencies at the state level. And it just kind of reinforces for me how real this has become.
Yeah.
You know, it's not like off in the fringes so much anymore. And you know, I haven't looked at the proposals in all the different states that I've heard it mentioned in. You know, I'm sure it ranges from, you know, somebody trying to regulate, which doesn't make sense at a state level, to, you know, accepting state government accepting it or trying to regulate, you know, merchant or financial institution use of cryptocurrencies and whatnot. But in every one of these cases, anyway, our counterpart trade associations, be they banks or credit unions, you know, are watching very carefully and being active in it because we want to make sure that, like you were saying, that credit unions aren't, you know, left out if something happens at the state level dealing with cryptocurrencies and financial services. So
Yeah,
it's
if
a
you
hot
want to
topic.
follow a good state that gets out ahead of regulation, is look at what New York has already produced a couple of papers on crypto. They have a very aggressive attorney general that, especially in payments, right? They have their own rules for third party senders. They're very aggressive in that state, and they've already taken some steps to kind of try to manage. And again, it's hard because you don't know where it's going to live, right? Is it going to remain an investment? Is it going to be used in a merchant? And then, really, I think what some of the state's concerns about what happens if intraday a merchant gets 50 Bitcoin and it goes down to zero, right? Do they have recourse against the consumer that paid, right? And there's got to be some protections because that's not the consumer's problem, right? If you chose to accept, you know, a volatile currency, then that really should be, um, you know. But I think it's funny when you say that it's becoming more real, right? I like to tell people the cars aren't flying just yet, but they're starting to hover a little bit, right? The back wheels are coming up. That's how I would describe where we're at, and the fintechs are just driving
Right.
because they're trying to figure out how to build systems that can settle without banks, right? Because they're having a hard time getting into the FI, so it works that way as well.
Steve?
Yes, okay. Sean, well, Joe, last year, I'm not sure when it was, but you had Mark Sibright and the gentleman from
Right.
BSU talking about contactless payments. And I know that I mentioned that to Sean. He's been doing a little bit of looking at this, and I know there was a global survey about it. And I don't know about all of you. I'm not seeing it yet. I don't know if maybe you're just certain stores I go to or whatnot, but I know, Sean, you've got some information about what's happened to contactless payments during the pandemic, and also there was a global survey too about this. So
Yeah, so Mastercard did some work right as the pandemic, right, the onslaught of the pandemic. And again, I'm going to caution this because it's a very global survey. Contactless payments like doubled, right? The use of contactless payments by consumers doubled at the onset of the pandemic. And so ever since then, I've been kind of doing my own work as me, Sean. Um, and I got to be honest, I'm not seeing what they saw in that study. I track when I go to stores. I pay attention when I'm in line. You see people like the Starbucks, right? People at Starbucks will use the phone, and some other places. But that survey to me, I think if you dug in, it's probably a lot more in Europe, those results, because Europe had the infrastructure, already has the infrastructure that we're still building here, right? A lot of the POS systems here in the US were upgraded to do the chip, right? That was our big thing. We were going to go to chip and we're going to spend all this money. And, uh, you know, if the merchants don't have the POS systems, then you're not seeing the drivers. So, I think for me, locally here in New England, we did a survey, NEACH.org. It's called NEACHsurveys.org, that we've offered up for all of our members to share with their members, their consumer members or corporates. It's two separate reels. You can go in as a business or as a consumer. And I really want to dig down on a local level to the payment preference in our area, because I think it's different than some of the studies we're seeing. Like, we're right on target in New England with the ACH growth that the network's seeing, our numbers match. When I look at all our members billing at the end of the month, we're seeing the same level of growth everyone else is, right? So in that regard, we're very similar. But I don't see in a lot of the stores that I'm in, I've been talking with people doing some of the survey work, and it's just not something that a lot of social circles are moving into. I think people are just around here getting used to P2P over the phone with Venmo and Zelle and some of these other tools. So one of the things I caution FIs about when you see things like the rise of contactless payments, people start thinking that they need to be in that space. And I like to just say, hold on, right? Because you need to understand your members and the members that you're trying to go after and what their preferences are. Because some of this stuff may not be where any of your members are at, whether it's them or their social circles. And if you can just go when you're out, watch the stores that you're in. I did it again this weekend. I was out with my kids and we hit up multiple places. I did not see one contactless payment from Friday through Monday morning, right? And the stores are crowded here in Mass because we've semi-opened up again. And I'm just amazed that it's not in your face. Like in my town, I worked with the Merchants Association. It's like maybe 3 merchants in North Andover that even can do it, accept contactless payments. So I think, some of these big studies or, maybe they're regional in nature, but I just don't see where the Northeast is that far out there yet as it relates to that. But I certainly would love to offer up for you folks that survey, NEACHsurveys.org. Share it. We're just getting the payment preferences of people. Do they like speed, security? We get into questions like, has your behavior changed because of the pandemic? And then as NEACH members, you can go back in and pull by demographics to see, college educated folks, here's their preferences. People that make this amount of money, here's their preferences. Businesses of this size, here's theirs. So you can start to see yourself and your members in the results to help you make better decisions. Because some of the things you're seeing as credit unions right now that we get calls about every day, I think the bigger things are your members using different apps like Cash App or some of these other things that are having some fraud issues with the devices and unemployment fraud and some of these other things. We're just not seeing any real talk about contactless payments in our area, whether fraud, good, bad, valid transactions, total volume. And when I look at that MasterCard, it does talk about a global study. And you think about where, Europe has always been ahead with us, even with chip and PIN. So it could just be that merchants are not there yet to be able to do that. Maybe some of the newer, hipper, what do they call that? Hip store owners are able to do that, but I'm not seeing it.
Anybody else seeing that in your area?
Yeah. Personal experience?
And I am seeing it. We have a contactless credit card. We get emails from members wanting contactless debit, especially when the pandemic started. It's a very young area in here, a lot of colleges, a lot of young people, 50% of our members are millennials. So we get a lot of that. And I'm finding that grocery stores and autos, gas stations are using contactless cards or contactless terminals.
And
I would also add, I would also add that I know that I've started using my credit card as contactless, kind of doing my own little survey. I can use it just about anywhere. I haven't found really a place where I haven't been able to use it yet.
Yeah, that's interesting because at least in this area, I haven't seen enough of it, but be happy to do it if they offer, if we could do it. But
it's a very young area with all the colleges here and very technically, I think, forward area.
That's really, that's
I think another one of the issues, the hurdles for contactless cards to overcome much like when merchants first started getting chip reading machines, that I think sometimes the clerk, at the register doesn't know, what to do or how to do. It used to be with the chip card, and now perhaps it might be with a contactless card, although that seems to be a little bit more self-service. I mean, if you use a contactless card and you see the logo for it, you can probably figure it out. But if somebody asks, I'm guessing that, the part-time high schooler manning the register at the grocery store for the first time, or working at Best Buy or something like that, sometimes might have a challenge helping somebody out with that. Maybe.
And the interesting part about the demographic Gene pointed out, these are folks that are going to carry forward that you have to serve when they're no longer a millennial and they're adult. They're not going backwards, right? So this is when you start to see those shifts, right? And part of the pandemic, right? There's some research out there that says the pandemic has shifted some of the innovation by at least 3 years, right? Because there's going to be a need. A certain level of the population is going to want to go contactless because they're just going to have the fear moving forward. This happened after the Spanish flu. People were in large droves, very afraid of going back into public, very afraid of touching. And you can have a percentage of people that need to be served by offering that. So I would imagine that there's going to be pockets, like you mentioned, where the people selling this to merchants understand where it's going to be more useful than not. And so I would imagine if maybe the next town over, I should go play around, because they do have a college, Merrimack College. I wonder if it's a little bit different because those vendors are seeing a different crowd, and the people selling the systems know and do track that kind of stuff. But, I thought I was going to be using it all the time myself, because I don't like germs to begin with. This whole thing has been terrible for me. And everywhere I go, I'm just not seeing the symbol. I'm watching to see if other people can do it. I'll use it in I have like my mobile wallet and stuff for Starbucks, but I wasn't seeing it. And we're not getting a lot of calls about it from our members, because again, if it's done right, it should be a very clean and simple transaction, right? It's still face to face, so you're gonna have fraud. Can be, it can be very little, right, or it can be really rampant. And if it's more local in use, that usually keeps the fraud down, right? Because you have such a social, it's kind of a social circle that's using the transaction and payment, and there's not enough there for fraudsters to try to break into, right? They'd still rather go chase down and put in the skimmers on the gas machines, which is always fascinating, but really interesting to see that. Yeah, so we'll keep an eye on that, and I'm hoping that there's more local work. I know the Fed does a 3-year payment study. Again, too big of a survey to see yourself in, but hopefully we can do some more local work to see what the appetite is. Because when you look at surveys, I'm going to tell you from doing a lot of work on these, I chair the market intelligence group of the Center for Payments. You have to be able to see yourself in a survey for it to make decisions for you, right? And so I'd really like a more local survey to talk about something like contactless payments, because I think the opportunities there for merchants and for just the optics of it as a merchant, that hey, look at me, I care, you don't have to touch anything here. It's really good for a business to be able to do that. And I've been surprised at the lack of it. I thought it would be running rampant, but I just haven't seen it. So.
Oh, Sean, we're getting up on quarter 5. No, we got a couple of the topics, but thought we just shift gears just a little bit. Sean is part of an effort that's called the Center for Payments. That's an organization that all of the regional payment associations are part of, and they've been doing a lot of work about online account work. And I thought that this might be good for this group to talk about what they're seeing with online account openings and what are some of the challenges. I think it might be important for all of you to hear what what they're seeing. So Sean, if you want to talk about that a little bit, I think it'd be interesting to hear.
Yeah, so we just commissioned a survey last year on the risks of online account opening. So the Center for Payments, which is the 10 RPAs together, which we all represent small to mid-sized FIs. So when you look at our survey reports, we had over 525 organizations, but we had, credit unions. 40% of our credit unions were 500 million or less. 28% of the credit unions responding were 500 to 5 billion. And then about 10% of the credit unions responding were greater than 5 billion. So it's right in the pocket of the size institution that NEACH represents. And one of the fascinating things about this survey, we started doing it before the pandemic broke, and then we kind of added some pandemic related questions. The fact that branches had to close and you still need to open up accounts was a challenge for some organizations. So we had about 52% of the FIs responded that they did offer online account opening. Of the 48% that said no, 65 point something percent of that was because of fraud. And a subset of that group used to offer online accounts but stopped because there was so much fraud. And we found that really interesting because as you go through the data supports that credit unions have done a much, much better job in the area of safeguarding online account opening. And the reasons jump out a little bit. We're still digging into this survey, but just off the top, a couple of reasons credit unions have done so well is some of the geography stuff that you're doing, right? People have to live in a certain area to join or become a member. So the online system just excludes anybody that doesn't play in that local area, right? So the fraudsters just don't even get a chance to create the bogus account. The other couple of areas, one was the limited type of membership, basically like I'm in a postal employees credit union. Some of these online account opening platforms can make you prove your employment or make you prove that a relative is employed on that in that place. So the other area where credit unions did so much better than FIs in the surveys were things like dollar limits were much lower for credit unions. So FIs sometimes were, no limits at all on what you could open an account with. Credit unions were typically restricting the type of accounts with dollar limits to non-transaction type accounts, meaning CDs or savings accounts that you can't just swish-wash money in and out. So we are going to put some stuff together for our NEACH credit union members that answered no, we don't do online account opening. And not that we ever tell people how to run their business, but I think there's an opportunity. And again, going back to the history of pandemics, there's going to be a percentage of people that are not going to walk into a public place like a branch. If you want to get those accounts, you've got to give them a way to do it electronically. And our argument is going to be that credit unions know how to do this safely and know how to do it securely. The fact that 62% of FIs admitted they were afraid to do this because of fraud is both shocking, but gives an opportunity to say, hey, here are the best practices of people that aren't experiencing fraud. And it allows you guys to compete and get into that game because we're talking about getting to the underbanked, the underserved, right? This is all greater good type stuff. We want people into financial institutions so that they can be a part of the credit and all of the good stuff that comes with having an account. We got to be able to do it electronically, but you got to be safe. So keep an eye out for NEACH. I'm going to share with Joe some links if you want to download the survey full results. You can get the executive summary off our website, but as NEACH members, anybody on this call can get the full results. It's really interesting when you dig in to see how the credit unions were doing. And then also as a result of that survey, it showed that people are adding more services as a result of the pandemic. On top of opening the account online, there's more people offering same-day ACH or faster bill payment and things of that nature. So it's starting to paint a little bit of a strategy, which I know we're going to talk about, Steve, but you can start to see payment strategy within the survey results, which is really cool. Wasn't the intention when we created the survey, but it's been the result of the responses.
Well, that kind of dovetails, Sean, into the last topic we had. Of course, if anybody has any questions after we're done, please ask them. But, you know, don't want to make this just a shameless plug for NEACH being on the board and Sean working for NEACH. But one of the things that NEACH is trying to do is try to expand its mission, not just to be about ACH, but, you know, there's risk assessments, there's audits, so there's lots of different things they do. But one of them is to help credit unions with payment strategies. You know, so, you know, that I think that's, you know, something that we've all got to try to figure out, although it's really hard not knowing where some of all this is going. But Sean, we're going to just talk about that a little bit and talk about, you know, helping credit unions develop a strategy.
Yeah, this is one of the things that, you know, our first survey we did as a group went back 2019, and we were really horrified about the number of FIs that said they didn't have a payment strategy or a digital strategy. And so one of the things we've been doing, you know, you think about the Oscars, NEACH has been typecast over the years as an ACH association, which we're very proud of our work in the ACH, but our mission changed years ago to go beyond and to talk about general payments. So those of you that are members, there's a lot of stuff that you get as part of NEACH membership. You don't have to pay extra for, you don't have to do anything else with us other than be members. Part of that is this survey work we do, and there's another survey on payment strategy that we did 2 years ago. But I think the key thing related to payment strategy for any institution, and I hate when people say, well, if you don't have a strategy, you're going out of business. That's a foolish thing to say to anybody, right? But when we think about payments in a low interest environment, having a good payment strategy is certainly a positive for an organization, whether you're trying to retain members or attract new members. Because what everybody wants, including NEACH, is to remain relevant, right? And you look at all the challenger banks, Chime, and some of these other institutions, they can make banking and credit union, they can make you guys irrelevant by relegating the account at the credit union to be a settlement account. And that things are just parking there to go somewhere else because they don't think you have the cool, sophisticated apps and things of that nature. But a lot depends on your membership, right? You guys know your members more than anybody. And that's important, right? To understand the members you have and to understand the members you're trying to attract and make sure that you have a plan. I know people freak out when you say strategy, so I'll just call it a plan. Have a plan around your payments to be ready to offer things, right? Whether it's something simple like same-day bill payment to enhance what you've already been offering, right? Because, again, I talked about this at the beginning. If I'm using bill payment today as a consumer and it's working, right, the only thing somebody can do to make me switch is say, I have an enhancement to what your credit union already does. And they're going to say, I can make your bill payment go faster. Well, if you're offering bill pay through same-day ACH, there's not anything somebody can offer me that's going to make me do the work to take the bill pay off your site and bring it somewhere else, right? And so that's really what strategy to me for payments is. It's not about spending a fortune. It's not about automatically connecting to the clearinghouse and the real-time payments network. It's not automatically connecting to FedNow when that's available. It's going back and trying to get a sense of what your members want, what they need. And I'd say the first place to start, look at your current ACH volume for your members. Look at how many transactions are coming from Dwolla, Google Pay. Look at what your members are actually doing with their checking account, and that's going to give you a little bit of a hint. If you have a way to have your IT people or your core providers kind of suck out where your payments are coming from, you're going to see that there's been a massive jump to some of these P2P and these wallets, and you can all do all of that for them, probably cheaper and more safer than where the members are going today. And so, you know, having a strategy is not about jumping and dating every fintech that comes along, right? Because I think a lot of people talk about strategy and what's your fintech strategy. I'm talking the level before that you have to start at, right? That's execution to me, right? Your strategy has to start from a, what do we want to do? What are we trying to accomplish from our members? What is your mission? Right? Is it to make access to the financial systems, is it to make transactions easier? And are you doing that if you only offer them a checkbook? You can't say you're making transactions easier for them if all they can do is write checks. Because we know there's 5 other payment types that are easier to do than a check. So I think you need to start there, right? And again, NEACH.org for free. You all can be part of the member community. We have a community called Innovating Payments where we put out things like building blocks, how to define a strategy. It's all there for the taking. So just go get what yours. It's yours. You paid for it within your dues. But have these conversations, at the board level, but be internally. Talk to your employees. I can't say younger employees, so we'll record that out, Joe. But talk to your younger employees and see what their circles are talking about. Gene mentioned the location. I think Susan talked about her personal experience with contactless. That's really important to your strategies, right? It's just understanding what people are doing or not doing within payments, because there's organizations you'll connect with. PSCU, they can sell you everything under the sun. They're a major fintech. Synergent, there's fintech. You can pretty much do what anybody else is doing. The point is, do you want to be doing that, right? And Steve and I were joking about a board meeting here. We had some consultants talk about the streets are littered with investments on products that banks offered that nobody used. LifeLock, life insurance, right? Some of these other things that people say, oh, we got to get into that. Just find out what people want before, and that's how you should start developing your strategy. And NEACH is a partner in that. Joe will work with Joe and get materials out on their site that we can share. We've done that in the past with Joe's group. Again, it's developed. It's yours. Whether you come to our site or to Joe's site to get it, I don't really care. The point is that people get the right information, because ultimately, these challenger banks, the Chimes of the world, it does become a problem, right? If you are getting relegated to just being the settlement account, right? Because that's what the Fed is in the payment system today, right? Isn't the Fed where settlement happens? Does anybody ever mistake the Fed for being cool, right? No, right? Because that's where we dump the money. You don't want to be that, because now once somebody gets comfortable with, oh, I don't need my debit card from my credit union. I don't need a loan from there. I can go to this thing. Or you just really got to pay attention. And I told Steve the hardest time I have talking with FIs is when to go, right? When do you make that decision to jump in? And so mainly we work with you to help you get to that point of, it should stick out like a sore thumb when it's time to act and invest and upgrade, or and don't forget your staff in that. Right? You're going to have to educate your staff on the new stuff that you may ultimately get to. That's really important, because that's where the losses happen. If your staff is uneducated, that's when the money goes out the door. And so that's what I would leave for payment strategy. It's important to have one, but it's more important to start it the right way and think about it the right way, and involve your people. They can be the best asset in this, and leverage whatever surveys you can find. But the ones we deliver on our site to our members, you'll see yourself in those surveys, because most of the FIs answering look and smell just like you do. It's not big bank surveys. So,
well, Joe, we're pushing up against 5, but I don't know if anybody's got any questions or comments. I mean, we tried to look at a wide range of issues with payments and what are the different things that we have to think about. Hopefully there's been some benefit here for doing this, but there's still a lot to be determined. But again, offer any thoughts, anybody thoughts or comments, concerns?
Well, anything else from anybody else in the line?
I just thought it was really interesting and really helpful. Thank you.
Oh, thank you.
Thank you
for that, Gene. And thank you, Steve and Sean. I think you accomplished what you set out to do in covering a wide swath of different issues, all related to payments and credit unions. And, Sean, I don't think there's a credit union on the line here, or a credit union in the Northeast that hasn't thought about at one point or another concern about all the non-financial institutions out there that are cherry picking all of these different pieces, parts out of traditional credit union services and traditional banking. So yeah.
Now they're all going to use this word new normal now. That's what you're going to hear. So I would leave it to all of you on the weekends, play a drinking game. Every time you read something in a trade press about the new normal of payments, take a little sip, because you're going to hear that everything is changing. And from what we told you today, really all that grew was ACH volume, which has been around since 1973. So the new normal is just people catching up to 1973 technology. So that's what the new normal's been so far. So don't get too hyped about it.
I will remember that interpretation.
All right.
Hey, thank you very much, gentlemen.
Thanks for having me.
For spending time with us, and thank you to everyone else for joining us this afternoon. Again, if you've got any questions for Sean or Steve, feel free to send them along to me or anybody else on our staff, and we'll forward them off to Sean and or Steve. And anything that we think of interest to you as follow-up, we'll share from Sean as well. As a point of interest for you, and I didn't put it in the update that I sent out earlier today, but in this time slot next Monday, we're going to be chatting with Austin Davis, who is the Governmental Affairs Director of the Lake Champlain Chamber of Commerce. He is the person who has been spearheading all of the response statewide to some legislators' effort or interest in the taxation of Paycheck Protection Program proceeds that get forgiven, converted into grants in 2021. And that's going on in a couple different states. But I think it started out innocently enough in Vermont. But then lo and behold, some legislators actually start questioning, oh, maybe we should have tax that and generate more revenues for the state and everything. And as you can imagine, that sentiment isn't going over well with most of the business sector of the state of Vermont. So Austin is going to share with us, the background on it, how it came about, what went on with it this time next week, and what the future is going to be. So be sure to join us for that. Again, we will archive this session and make it available to everyone tomorrow. I hope you have a great week.